Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special housing report, which today is all about banana smoothies. Well, actually it's about mortgage rates, but it's about a video that Westpac has sent to its customers via email about mortgage interest rates in Australia, in which Westpac compared its increase in mortgage interest rates more than other banks and more than the Reserve Bank's increase in their official cash rate, by saying that at a time when there's a storm, banana prices increased, which meant that people making banana smoothies increased their prices. And Westpac is saying the recent storm on financial markets is just the same, that they've had to pass on the increased cost of funding their lending to customers. Unfortunately, this is just not washing in Australia, for Westpac at least. The reaction has been very bad from the public and from the politicians. There's been outrage from many customers, that they're having to pay more than other bank customers, also from the politicians, because Westpac, after a recent increase in the official cash rate in Australia, put up its variable mortgage rate by 45 basis points. The OCR increase was only 25 basis points. Now, other banks have actually increased their variable mortgage rates by slightly more than the 25 basis points, but not nearly as much as Westpac. So why does this matter here in New Zealand? Well, in Australia, most people are on variable mortgage rates because they're always cheaper than fixed rates. Whereas in New Zealand, until now at least, most people have been on fixed rates rather than variable rates. So we don't care too much what the banks have done with their variable mortgage rates after there's a move in the official cash rate. But that's changing as New Zealand variable mortgage rates become cheaper than fixed rates. And many people are going to care a lot more about what the banks do when the Reserve Bank puts up interest rates. And given our Reserve Bank is likely to start increasing interest rates as early as the middle of next year, we have to ask the question, what will our banks do this time? And Westpac, what will it do in New Zealand? Got a feeling they're not going to run this video after the negative reaction they've had. You can see the video shortly after I finish here, but needless to say it comes across as condescending and raises the question, is Westpac really passing on its costs, or is it adding in a bit more margin just so that its profits are supported? And it raises the question, is it right for banks to try and rebuild their profits at a time when many customers are having to deal with high interest rates or rising interest rates? And of course, is the market competitive? It certainly is in New Zealand, and many people are saying maybe it's not quite so competitive in Australia. We even had Kevin Rudd, the Prime Minister, come out and say Westpac customers should consider moving banks. Interesting. So hang on a minute and watch this video all about banana smoothies and mortgage rates. I'm Bernard Hickey for interest.co.nz.